Welcome to episode 10 of Price Action Trading Series from Market Secrets. In this episode, we are going to discuss about zone drawing, which is proximal and distal lines and how to draw zones. So let's get started. The first question is, how do I draw a level in a consistent and methodological way? Because every day we will be drawing zones in multiple charts. So we need to have a proper consistent system and a method in place to draw the zones. So to do that, we will have two lines, proximal and distal lines. We'll be using these two lines to draw the zones methodologically so that our drawing will always be consistent. So, before we draw a zone, we need to spot an imbalance which we have discussed in the previous episodes. Once you identify a base of an imbalance, then you can draw the zone by drawing two features. One is a proximal line and the second is a distal line. The proximal line is the line which is always closest to the current price, and the distal line is always the price which is further away from the current price. Let's see it with an example. So here, if you see, there is a line here which represents the current market price. So I'm going to draw a supply zone on the top and a demand zone on the bottom, that is below the current market price. So if you do that, the line, while drawing a demand zone, the line which is closest to the current market price will be your proximal line. So when it comes to demand zone, the price which is on the top will be the proximal line because it is the closest one to the current price. When it comes to supply zone, the line which is at the bottom of the zone will be your proximal line. So if you look at here, this is the proximal line for the supply zone and it is closest to the current market price in the zone. So if you look at here, in both the zones, the line which is this is one line and this is another line. So, and for supply zone, this is the first line and this is the second line. So in any case, for a supply zone or a demand zone, the line which is closest to the current market price is your proximal line. So these two lines are proximal lines, and these two lines which are further away from the current market price, that is this line and this particular line, is your distal line. As simple as that. So if you want to remember it in some other way, it is totally fine as well, but this is a simple example. The line which is for any zone, there will be two lines. This is the first line and this is the second line for supply zone, and this is the first line and this is the second line for demand zone. And in any zone, the price which is closest to the current market price is your proximal line. So these two are proximal lines for these zones, and these two are distal lines because they are further away from the current market price. Okay, so hope you got it. So now let's discuss in detail about what is a distal line and proximal line. An area of supply or demand is not just a single line or a particular price, like classic support and resistance that you see when you apply, the pivot points in the chart. Generally, a zone is an area composed of number of ticks. Okay, for a supply zone, the highest part of the rectangle is the distal line, that is the highest price in this entire zone. This entire area is called a zone. So the highest price at this particular area is your distal line, and the lowest part of this rectangle is the proximal line, which is closest and lowest to the current price. Okay, hope you got it clear now. The closer we are to the supply area, the better for selling and exiting your longs. For example, if you have taken any longs, then if the price is moving closer to the supply zone, it is always better to exit your longs, or you can even take a short position. The closer we are to the demand zone, it is always better to buy or exit your short positions, because these uh, demand zones and supply zones are not single price line. It is actually an area, and price can react it anywhere from this particular area. We generally use patterns to draw the bases. Engulfing patterns, it can be piercing patterns, Haramis and Marubozu patterns. And we generally don't use highway candles, wiki candles and failed ERC candles for drawing the zones. We don't use these kind of candles to draw the zones because we need a clear base and a clear pause in the market. So we need to identify those kind of areas and we need to draw these distal and proximal lines. As per our guidelines, a cleaner a base looks like, the stronger it is going to generate a bigger move. So it should not have many wicks. That is the condition of looking cleaner. We want to see tight price action with explosive moves at the zones. There's an important note here. There are times when zones will have no basing candles at all, or even an ERC candle is available at a base. They are not as common, but they can still be valid zones nevertheless. We must read the price action and score the zone together with a top-down analysis in order to evaluate its tradability. The concept of zone scoring will be explained later. There are unfortunately many different looks and shapes for basing zones. These looks will not vary depending on which stock you are trading. There is no difference between a stock candlestick pattern and a commodities and index candlestick pattern. So let's see some of the rules that we need to follow while drawing a zone. In order for us to draw a base, we don't include the highs, that is wicks, of a basing candle to draw a demand zone or a low for a supply zone. What I mean is, when you draw a demand zone, you should not include highs of the base while drawing it. So if you draw a demand zone and this is your basing candle, you should ignore this high of the candle while drawing this demand zone. So your proximal line should start here and it should not start here. So your proximal line should start here. This is the meaning of this statement or this rule. Likewise, when you draw a supply zone, you should ignore the lower wick and you should draw your proximal line at this price level. Okay, you can ignore this wick. This is the basic condition. But later on, when you have gained enough experience with a lot of screen time, you may decide to draw a level wider. The level is not too wide to have a bigger area to ensure that you get your trade filled. But for now, we have to keep it by the rules laid out. So when you draw a proximal line, whether it is for a demand zone or a supply zone, you should ignore the corresponding wicks that is closer to current market price. Okay, so now I am sure that this is not the first point you came into contact with trading, and you should definitely have read some books and watched some videos and attended some trainings before. You will have noticed that reality never really keeps lining up with the things mentioned in the books or trainings. Formations and candles that look so nice and easy to read in the book seems completely different on a chart that you look at every time when you open your trading platform. Unfortunately, the reality of market is that they hardly provide us with the perfect looking candle formation, or for this matter, a base every single time. In fact, they almost never do. There are many nuances we need to take into account, so you better get familiar with this harsh reality. There are times when you can be flexible drawing the imbalance, but before you start being flexible, you must understand and sink in the rules for quite some time, spend a lot of screen time in front of the charts and see thousands of scenarios. It is very important to understand that before you tweak any rules, you must first master them. There are some cases when you can adjust the proximal line. Like I mentioned earlier, if it is a single candle in the base, then you can adjust your proximal line to include this wicks as well. For example, if it is the only candle at the base, then you have an option to draw the base here and draw the base here. But if it's a multiple zones, then you must ignore the wicks and you should use the body to draw the proximal line. And there is second adjustment rule. For example, if the candlesticks are forming the base with tight and very small candles, then we can draw the proximal line covering the shadows as well, that is the wicks as well. So when it comes to proximal line drawing, you always ignore the wicks that is closer to the current market price, and you need to take body into consideration except for two scenarios. One is if there is only a single candle at the base, and the second is if there are multiple candles but all the candles looks very tight and very small. In both these cases, you can consider including this wicks as well for drawing the proximal line. This is the entire rule for drawing a proximal line. But when it comes to distal line, there is no exceptions. There is no flexibility. Your distal line should always follow a rigid rule because it is related to stop loss. So we will not be messing around with your distal line. It should always be the highest point in this entire supply zone. And when it comes to demand zone, your distal line should always be the lowest point in that entire zone area. You should not alter with this rule. There is no flexibility. In order to draw a correct base, we first need to learn how to read price action candle by candle. Luckily, there are few well-known candlestick patterns that can consistently provide high odds trading opportunities. But as mentioned before, they come in varying shapes and sizes. Let's discuss about it in detail in the forthcoming sessions. But in this episode, I hope you understand how to draw a proximal and distal line and what are the factors that can be considered and what should not be altered while drawing these proximal and distal lines. So like we discussed in the earlier episodes, go and spot some supply and demand zones in your charts and try drawing these proximal and distal lines at the supply and demand zones. Please do share your examples through email or in the comment section of this video. So these are the rules that we have just discussed. So if you want, you can capture a screenshot of it for your easy reference. And very soon there will be an workshop on price action trading. We will let you know the details in a very short while. You can follow our channel in Telegram to get the regular updates about this workshop. It will again be completely free. The plan is to have a 2-hour workshop to discuss about all the items that we discussed in the first 10 episodes, and we can see some real-time examples of all those scenarios. That's the main intention, because just with these videos it won't be really easy to understand things. So if you have a workshop and if it is interactive, then we can get the better out of these 10 episodes. That is the whole intention behind this workshop idea. So if you are interested, wait for instructions in our Telegram channel, and again it will be completely free for all of you. So thanks again for watching. Have a great day. Goodbye.